The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you got markets accelerating a little bit lower. On the numbers we got out this morning, we go from 61.46 down to 61.28 right now. A little bit of negative action coming into an important Fed decision at 2 p.m. Eastern Time today. S&P's positive by 1 point, trading at 61.28. You see the dip lower on the NASDAQ 100, 22,284. We're negative by just 30 points. But yeah, you're talking about 100 points in the last hour, trading negative. You jump over to the Dow, positive by 73 points, but still, you look at the pullback. You're talking about 120 points from where we were just a half hour ago. Russell holding on to the gains, up by 15 points or 0.6%. Bitcoin, 105,000. We almost made 109,000 in the futures yesterday, but Bitcoin down $2,000 technically at 105,000. Crude just above $70. We got a treat. We're going to be talking to our man Teddy Kegstad at 40 past the hour. We're going to be talking some commodities, and Teddy's got quite a roundup. He was texting me yesterday talking about kind of a year outlook and commodities with the currencies. So 40 past the hour. Don't miss that one with our man Teddy Kegstad. Gold right now, negative by $3 at $26.58. We jump to yields. You have the 10-year right now just above 4.4. We're sitting at 109.24. You're negative by 5 ticks right now. And yeah, that's correlating to a yield of 4.41%. 4.41, the yield on the 10-year. You look at the daily, right? You can see it, 4.41, lower yield, higher price. Potentially heading back to the lows of November 15th. We'll see what Chairman Powell has to say today. We jump over to the dollar index, DXY. As close as you can get to 107, basically, as we're chopping around at that level for 5 consecutive days, right? 106.99, we'll call it. We have recent highs of 108.07, but dollar on a longer-term basis over the last 2 years, this has been a critical level, that 107 level. We've been bumping up against it. The acceleration after the election from about 104, you reach the 107 level by November 14th. And here we are, almost 5 weeks later, pushing that 107 level yet again. And yeah, these markets rolling over a little bit, and we will see what Chairman Powell has to say. So you jump over and kick it off right even with the front page of Bloomberg, right? Set to deliver the 3rd straight interest rate cut is what the Fed's about to do. And where are they going to be in 2025, though? Okay, so here we are in December. This is the upper boundary that they use. So the meeting today, there's about a 96% probability that the Fed is going to cut their overnight lending rate to a range of 4.5 to 4.25%. On this chart, there it is. Where are they going to go next year? Yeah, well, right now you got maybe a cut in March, okay? Their forecast, maybe a cut in June, and maybe one more, 3 cuts. The market doesn't think we have 3 cuts coming. We'll see where they go. We'll see where they go with the forecast. We'll see what Chairman Powell has to say. We'll broadcast that live at 2:30 here at live on TFNN. But yes, set to deliver the 3rd straight cut. That'll bring it to 4.25 to 4.5%. There's the chart we just talked about, though. The more interesting fact is where they're going to go in the future. Projections, right? The dot plot. Yeah. How are they going to change things up? We get the update on the statement, of course. Policymakers could add language saying that they expect to lower rates gradually. I expect they're going to tweak the language just a bit in light of what's coming down the line. Remember, this is the last meeting prior to Trump taking office. He takes office January 20th. I believe their meeting after that, you're talking about January 29th is the following meeting after that. So they're not going to be able to delay in terms of potentially looking at new policies. whether it's tariffs potentially, whatever it is. We'll see where we go. But we get a little bit of taste of it today with a decision due at 2 p.m. Eastern Time and a press conference to follow at 2:30. We take a look at gold. Now, dollar relentlessly strong to the 107 level. Gold, a little bit of a pullback. It is interesting on a daily basis, right? We get that spike higher. We've trailed off a bit on the volume. If we pull back, this is where we based out towards the end of November, beginning of December. And we'll see what our man Teddy has to say about some of these commodities at 40 past the hour. We check back in on that dollar as we flirt with 107. Yeah, 106.98 right now on the dollar. All right, we jump around and keep the Fed in quote focus. This article from Bloomberg. So bond traders target deeper 2025 Fed rate cuts than the market expectation. This is always interesting, is if you do look at how the market is pricing right now, okay, and the market's pricing maybe 1 to 2 cuts next year. So you look at things from a risk-reward perspective, right? What are the chances that we go to 4.5% today? And what are the chances that the Fed needs to cut from here next year more than 1 to 2 times, or what are the chances that maybe they need to raise? Well, it looks like the bond traders are targeting more cuts than the market thinks is going on right now, okay? But in interest rate options, okay, traders are betting that the market's view is too hawkish, that the Fed will hew more closely to what it projected in September, talking about 4 quarter-point cuts, driving the implied Fed funds target rate down to 3.375, right? That would bring their range down to 3.25% to 3.5%, which will be 4 cuts from where we are supposed to be as of 2 p.m. Eastern Time today. That's not outlandish. Okay, 3.4% in this market. Can we handle that? Yeah, I bet the market can handle that. Is that an inflationary, accommodative rate to this economy? It's possible. It's possible that natural rate of growth in this economy could be higher than 3.5%, right? That the R-star could be higher, but you're probably in the ballpark. And you're probably not too inflationary if you get to that level. So we'll see where we go. But that's how traders are lining up. Fed Fund Futures open interest. Yeah, you got traders piling in here and looking for potentially, all right, the market's been wrong a couple times on Chairman Powell. And we'll see if he decides to correct the market today. But traders are lining up as the dollar is pushing almost 107. Now, if you get more cuts than the market expects, what's that going to lead to? That's going to lead to lower yields, and that should, in the long run, lead to a weakened dollar, which would be a plus for gold as well. So if that's how it's lining up, we'll see how it lines up. Gold kind of trailing back to this 2650 area. That's where you initially topped out, 2650 to 2700. You've gotten a couple spikes above that level, but you have gold right now negative by $4. We jump around to some of the Magnificent Seven as they plow higher. You know, I was reading about breadth in this market. We got a couple charts we're going to talk about later in the program, talking about the Dow. This is the longest streak of Dow losses since like 1968 or something like that. You take a look at the Dow. There's your daily. What are we talking about? 3, 6, 9 straight days. Ignore the bounce we got on futures when you roll over. But yeah, we got Dow weakness, and we got market breadth not that great as we have more decliners even as the market goes up. Why is that? You've got a rotation into the Magnificent Seven. We'll talk about that when we get back. Stay tuned, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We get the S&Ps flat right now, 61.27. Dow positive. Could it be for the first time in the last 10 days? Maybe. We're only positive by less than 0.2%. The market hasn't even opened yet. The day is young, and we have a Fed decision at 2 p.m. Eastern Time. Press conference to follow. We'll air it here live. And then I'm going to be hosting the Tom O'Brien Show this afternoon. We got Elliot Wallenbach from Direxion. He's going to be on the program at 3:15 p.m. Eastern Time. Always a fun interview. But as I mentioned, we got Teddy Kekstad coming up this hour at 40 past the hour. And he was ready. We were texting yesterday. We're going to talk some commodities as we look forward to the year ahead, 2025. But before we get into that, talking about this market and talking about breadth. So check this one out. This one's an interesting one from Bloomberg, out early this morning. Okay, I was reading this one. This one caught my eye more than anything else probably this morning. First of all, how about just some of the statistics as we come into the end of 2024? Basically sitting at record highs, 57 all-time highs we have this year as the market just marches forward in dramatic pattern. They talk about some buying, different indicators, whatever it is, talking about buying, okay? But check it out. How about the S&P 500 is coming off 12 straight sessions with more decliners than advancers. The longest run in Bloomberg's data, going back to 1996, while separate data suggests this is the second longest stretch in a century, okay? It's quite a line when you look at, so this is the chart. This is decliners exceeding advancers 12 days in a row. I mean, folks, if you run the odds, okay, of what the odds are, consecutive occurrences and probabilities, that's the reason why the odds of picking 6 numbers in the lottery are hundreds of millions, because consecutive probabilities, right? But something like, and this is where exponential growth, okay, something like a 50%, okay, it's the same deal where you fold a piece of paper in half a certain amount of times and it becomes as big as a phone book, right? Because exponential growth. The odds of a 12 consecutive occurrence occurring, I'm not even going to be able to do it real quick. All right, I'll pull it up at the break and I'll break it down because this is a cool one. We're going to talk about when we get back at 9:30 because this one will, it sometimes is hard for the brain to understand exponential numbers because of how exponential growth works in probabilities as well. So consecutive runs. And that's why when you look at something like you have an 80% probability, right? And I'm digressing, I'm going, but this is important stuff for trading. If you're ever wrapping your brain around the mental gymnastics that you do sometimes when you're assessing probabilities for trades of success and then planning for the inevitable failures that are in those probabilities that occur more often than most people imagine when they run those scenarios in their brains the first time. Simple example. You are placing option trades in the money with an 80% probability, okay? You're risking $8 to make $2. Is that right? Yeah. No, that wouldn't be it. An 80% probability. Look at me on the spot. Nonetheless, let's say you have an 80% probability you're going to win 4 out of 5 times. You make that trade every day, you're going to lose once a week. You make that trade on any given day, right? And you lose, you say, come on, man, I'm going to win this 80% of the time. I'm going to win it almost every time. No, you're going to have a loss guaranteed once a week on the long run, and you better be prepared for it. And, 12 in a row, we'll run the numbers, but nonetheless. The last part that we'll touch on, does anybody know out there in the den and over on YouTube? Think about it. If you don't know it, don't Google it just yet. Let your mind think about it a little bit, okay? A deck of cards. How many different combinations of shuffling a deck of cards do you think are out there? Hang on to that one, and we'll talk about it more at the break as we go back. Now, getting into the better part of this article, back to the market, okay? How about when you look at, so you have declining and advancing, but meanwhile we have the market holding up well and going up. What is happening? You have a rotation into the strongest, largest companies up there, holding this market up over the last 12 days, okay? Now, you go into the S&P. We take a look at a daily. That's 3, 6, 9. Here's your last 12 days. Guess what, folks? The last 12 days started right when we came into the peak of November 11th. So you come into that top, and what happens? Well, what happens is the biggest equities out there are holding up this market. You want to see some of them? How about Amazon the last 12 days? Right? What do we got to go back? 3, 6, 9, 12. Amazon just traded from 207 to 231. You're up more than 10% over that period of time. You accelerate over the highs that we had previous. Microsoft, the last 12 days. I don't even have to count to show you where we are in this market. Apple shares, the last 12 days. Folks, I just showed you that advancing, declining. You have more decliners than advancers for the last 12 days. Look at the Magnificent Seven, right? Yeah. Google shares. I mean, this one, a little bit of an outlier over the last 12 days because you got Willow. But, boy, you realize it, right? Where is the money coming from to go into all of these Magnificent Seven stocks? You know where it's coming from? From the other equities as investors are plowing in. Tesla. My goodness. They're taking all the monies. Up to 479 yesterday. You have Tesla shares now trading with a market cap in excess of $1.5 trillion. You talk about it, man. We talked about it. Meta shares. I mean, even not as stratospheric as the others, but you back it up. You go 3, 6, 9, 12 days, right? Even Meta over that time from 575 to 620. Let's see if Netflix is in that bunch. Yeah, Netflix is higher. So it's been a remarkable shift from some of the smaller equities with more decliners on 12 consecutive days, as you've seen a huge acceleration in some of those tech stocks. And we'll see, though, are they able to hold up this market on a longer term if you're seeing some weakness outside of those 7? That's the point that I got from it, right? If this is happening and you have overall weakness only held up by these equities, as we've seen before, okay? But check out the rotation. You have the S&P in black here. You have the S&P 500 equal-weighted index in the red. And you've got the Magnificent 7 in the blue, up more than 20% since the election. That's a lot of expectations built into some of these equities going forward. And we'll see if it can hold up. We pick up today, though, a little bit negative price. NASDAQ. Let's delete that one. Whoops. Let's delete them both. As we come into the opening bell, you got the NASDAQ dipping lower, 22,281, off by 30 points. S&P's off by 3. We're coming back for the opening bell. Don't go away, folks.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps negative by 5 right now. NASDAQ 100 off by 17 right now. And we got markets open. And yeah, so touching back real quick. Okay, talking about just the probabilities of how things work out. So here, let me see what happens when I blow this up. Can I zoom it in? Either way, 12 consecutive coin flips. If you nail them all, 1 in 4,096. Yeah. It's not easy to hit a 50-50 12 consecutive times, folks. That's why the sports books make all their money off of parlays, because people have an inability to see how difficult it is to be able to get something consecutively so many times. And you can see how quickly they rise, okay? To get it right twice is a 1 in 4. To get it right 3 times in a row, 1 in 8, 4 times, 16, 5 is 32, 6 is 64, and you see how quickly it goes up to the top. Exponential growth. That's why they tell you to save early, right? Those later years, that exponential growth that you can get. Now, when you talk about shuffling a deck of cards, this one will make your brain melt if you haven't thought about this one before. Now, I think everybody can imagine that the odds of an identical shuffle, 52 cards in a row, 4 different suits, very difficult, but you have no idea unless you've actually thought about it how large that number can be. Now, from a mathematical standpoint, the mathematical equation is, you say, what are the number of combinations that you can shuffle a deck? 52 factorial, which is 52 exclamation point, which means that you take 52 and multiply it by every number going down to the number 1, number 2 being the last, of course. So 52 by 51, by 50, by 49, by 48, by 47. You're multiplying all those numbers down. That gets you to a number of 8 times 10 to the 67th power, which is the same thing as saying 8 and then add 67 zeros after it. I don't know if that number even has an actual number, right? 8 with 67 zeros. Folks, an 8 with 9 zeros is a billion. An 8 with 12 zeros is a trillion. Add 67 zeros. In context of how large that number is, okay, this is an incredibly vast number, far exceeding the estimated number of atoms in the observable universe. It's more atoms than exist in the observable universe is the number of combinations of a shuffle deck. If that doesn't show you how large numbers can get so quickly on an exponential factor, okay? If you shuffle a deck of cards every second in the entire age of the universe, no, you're not even close. How about if every person on Earth shuffled a deck of cards for every second for the entire age of the universe? Still incredibly tiny. That's how large that number is. So to put things in context, when you're talking about probabilities and consecutive numbers, even something as simple as a 50-50, that's a 1 out of 4,000 probability that we just achieved when you have 12 consecutive days of advanced decliners. And when you look at that, there's about 220 market days a year, Monday through Friday with holidays, right? 220. You have a 1 in 4,000 occurrence happening right now. That's almost 20 years right there. Easy probability math to get 12 in a row. And you do it again, you go to 1 in 8,000, right? You can see how quickly. Nonetheless, let's get back to the market. We got markets in negative territory with the NASDAQ off by 72 right now. And we are down to the lows of yesterday right now in the NASDAQ 100. And yeah, you got a little bit of spike lower. We're getting it back a little bit. But we'll see where we go from there. All right, we see what else we had pulled up here. We talked about bond traders. We talked about the S&P and the breadth. Yeah, let me see what I have pulled up here. We got a couple articles that we could talk about. How about Nissan and Honda? So Nissan's top shareholder, Renault, said they're open to Honda talks, and you got markets accelerating today. Yeah. What are these symbols? Because they are big, you can imagine. Renault is eager for the Japanese company to find ways to become stronger, even if it isn't willing to inject cash into Nissan. and Nissan's biggest shareholder, and its approval will be key to any agreement. But guess what? They're open to it, and you're hearing those things accelerate today. Car makers, they're going to have to compete with Tesla, right? I half kid. Yeah, and how about Walmart? Let's jump around to some of these. Just a story in general. When you're talking about the run that Walmart has had, and then it's remarkable when you compare it to consumer staples. So this one over at Bloomberg. Walmart cements retail dominance. Now, they're going to have to contend with Amazon, I would argue here. But, boy, above everybody else, they are there. And they are now a competitor to Amazon. During COVID, I was a big complainer about Walmart and Sam's. They would drop off large packages that looked like they had been used and abused, stuff everywhere inside. And that's not the case anymore. That money that they were spending that caused their stock price a little bit of woes, when you're talking about capital expenditure to keep up with Amazon and better their delivery, they've done it, man. And yeah, they have some ways to go. They all do. It's going to be a constant battle, but they are now there. And they've been rewarded with some share prices. How about adding more than $340 billion? Yeah, up 82% this year. This is at a time that others have struggled, including Target. S&P 500 consumer staples in the red. Walmart percentage gain in the black. Yeah. I mean, I've talked about Sam's. You know, they are Sam's, folks. You know, you think about technology, okay? I tell you. So I go to Sam's. If you haven't heard me talk about it before, as this market trades a little bit lower, Dow actually in the positive today. Sam's says scan and go. You scan the items in your cart. And then what happens is that just like all these warehouses, places, right, you got to show the receipt on your way out. They scan a few items to make sure. They do a variable check to make sure you paid for everything. You never have to wait in line. And I'm always amazed at the amount of lines that exist at Sam's when anybody can open their Sam's app, scan the items themselves, and pay. Because what happens is that you have to wait to go to the register to get a scanner that already exists on your phone. It's happening, and there's no reason that's not going to be ever present, and Walmart's the only one to do it that I know of right now. Maybe it's happening at Costco as well, but there's no reason why this can't be happening at Walmart. The only reason why this isn't happening right now at Walmart is that they don't have the setup where they have people checking receipts on the way out. That is going to change in the very near term when you're going to have sensors with RFID scanners that can simply make sure that you've paid for it. They scan your cart real quick on the way out, and you're fine. And that's coming, and Walmart's right on the forefront of it. So you talk about technology, they are there. And look at the last few years. This year in particular, trading from 52 up to 94, making all-time high in 96. Compare that to some other companies like Target. All right, put it back on the daily. Just this year, we peak at 181. We're trading at 132 right now. Kohl's, don't touch Kohl's, man. Kohl's has some issues. Yeah, risk reward, but you might get a bounce. But boy, technically, fundamentally, whatever you want to call it, that's an ugly chart, man. You're at the COVID lows, and you are back to where we were trading in Kohl's of 1997. I was 17 years old, and unfortunately, that was a long time ago. All right, folks, stay tuned. We're coming back with our man Teddy Kegstad. We're going to talk some year-end predictions. We'll talk some commodities. We'll talk some 2025. We'll talk some Forex as well. Stay tuned. Don't go away, folks.
Ho, ho, ho! The Tiger Dollar Holiday Double Bonus Sale 2024 is here.
Amazing money!
Now through December 23rd, we've doubled the bonuses. Don't miss your opportunity to get a double bonus up to 40% on your Tiger Dollar purchase. Here's how it works. Purchase 500 Tiger Dollars and receive 100 bonus Tiger Dollars. That's a 20% bonus, $600 total. Purchase 1,000 Tiger Dollars and receive 300 bonus Tiger Dollars. A 30% bonus, $1,300 total. Purchase 1,500 Tiger Dollars and receive 600 bonus Tiger Dollars. That's a 40% bonus, 2,100 total.
Oh, wow!
But you have to hurry because this Holiday Tiger Dollar Double Bonus Sale ends on December 23rd. Visit the front page of TFNN for details and get your Tiger Dollars today.
Ho, ho, ho! TFNN!
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&P's negative by 6 right now. We jump around as our man Alice getting our man Teddy all set. He's got his 2025 predictions coming up, folks. I can't wait. He was charged texting yesterday. We're getting him in the queue right now. And as we jump around, NASDAQ 100 negative by about 45 right now. We get you a little bit of a lift on that open, right? Down to 22,000, just below the 220 mark. We're up a bit from that price level. And let's jump around to some of the high flyers recently as we got a little bit of a give back. Amazon. Talking about $3, just like that, from where we were at 7 a.m. this morning. Amazon shares trading it down $1 at 230.13. We jump over to Apple shares, down about 0.6% as well. A little bit of a pullback right now. Microsoft off by 1.3%. Look at that move. We jump over to Meta shares, down by 0.2% right now. We jump over to Tesla, down by 2.7%. I'd say holding up pretty well, though. You're pushing 470, 466 right now for Tesla, down by $12. Some of the other high flyers, Salesforce, they give it back as well, though. Up by 11 pennies, but they were up to, what, $3.55? You get back $5. Let's take a look at some of the chip stocks. Look at this, man, NVIDIA. Even as we get a pullback elsewhere, NVIDIA up by almost 4% to 135.89. Broadcom, they've been on quite a tear recently. Last few days, you're negative by 1% right now. AMD shares up by 0.7%. We check in on Intel, up by 0.4%. We check out some of the airlines. Look at this pop. Yeah, on Delta. Saw this one, up by 1.6% on the open for Delta. Look at the different areas of this market right now, right? Maybe everybody's making their 2025 predictions. As look at these pops on airlines. American gets a 3% pop right on the open. You jump over to United. Yeah. Up by 2.2%, man. Even JetBlue is participating, up by 3%. JetBlue to 750. Yeah, you know, JetBlue, it's in the doldrums, chopping around between about 6 and 8. You're coming into the highs we had in October. That high, 807, was still trading at 752. But on a longer-term basis, maybe that was our bottom late last year of $3. You're up more than 100%. But boy, percentages on small numbers can be deceiving, as I say, right? You can say, boy, this thing's on the tear. We're up 100% from where we were last year. Yeah, that could be true. All you're doing is coming into the consolidation. If you back this up on a 3-year weekly on JetBlue shares, you're just coming into this consolidation that existed for the better part of June 2022 to June 2023. It's going to take some work to get through that level as well. with everything lining up for the other airlines, even JetBlue continuing to even struggle in this environment is a tough one when you're trading at 751. And what are we talking about market cap wise? Only 2.6 billion, right? You think about the ability to buy an airline for 2.6 billion, they got issues, folks. All right, taking a look at some of the probabilities of that Fed rate cut. When we take a look at the Fed. So as of this afternoon, 98.8%. It's locked in, folks. The Fed is going to cut by 25 basis points, but the more interesting conversation goes, where do we go in 2025? Okay? If we're 4.25 to 4.5% as of this afternoon, 8 meetings into the future, this is the probabilities of what the market has priced in right now. Now, the Fed's dot plot is pointing to what? A lot more rate cuts than this, 3 to 4, somewhere in that range. The market is saying maybe 1 to 2, right? 2 being the most likely at about a 33% probability, and 1 being the second most likely over the next 8 meetings. That's 1 to 2 cuts over the next 8 meetings. Now, when you look at that for risk reward in terms of where we are in this market, you'd say, do I think the Fed could have more or less cuts? Well, there's not much room for less. Yes, they could actually need to hike if inflation really accelerates again. Okay, that is an outlier risk that's not priced in anywhere here. But you do see the ability that maybe the Fed says, hey, you know what? Inflation is not a problem, and we're going to cut because we're seeing lagging indicators that are recessionary. And that's what some of those bond traders are lining up for when you talk about pricing the market, that you might see, right? 3 cuts, maybe even 4 next year. Maybe the Fed is going to reiterate where they were in September. But it's interesting when you look at that we are now priced at a level that you're talking about 4.41%. And we'll see if he gives any indication today. But nonetheless, we know where we sit. All right, and we got our man ready. Folks, head on over to the front page of TFNN. Right under the newsletter tab, you can check out the Tiger Forex report. Teddy's got a couple of outstanding webinars under the services tab as well. Check those out during the holidays. You got the time. They're great webinars. And let's get into it. Teddy Kegstad, good morning.
Good morning, Tommy. We finally got a connection.
I'm happy to hear it, man, because I know we were texting yesterday, and it's Fed Day, Teddy. Like we said, we've that conversation, we can touch on it, but I think the market's expecting a cut, and boy, 2025 is going to be an interesting one though in terms of where we go. We got a new administration, and the Fed's going to have their hands full fighting through this. We know that it's an interesting market, but I know you got some predictions, man. So what are we going to look at? What do you want to kick things off with as we come into 2025?
Well, right now, I think we're going to have screaming inflation going into the first quarter.
Oof. Okay, here we go. I like it. Let's hear it.
So, I'm a commodity guy, and I was checking out the grains and the meats and some other commodities, and you have things like coffee to begin with. I'll tell you what, in 2025, I bet you're going to be paying more than another $1 higher for your whatever double decaf mocha, whatever grande or whatever you have from there.
My latte. Get away from my latte with those high prices.
Sorry, man, but you're probably going to see $1. You're probably going to see $1 bump in price soon.
Okay.
So, I mean, you look at these charts, corn, cocoa, coffee, sugar, all these raw commodities, they're exploding. They're going way too high for this time of year. It's not like we don't have seasonal issues that are the issue. There's not even growing capacity that's the issue. There's transportation costs obviously are high, but that's not what's driving these things. So, and I think that as you look at that, you could probably see an acceleration in food prices going into the next 3 to 6 months. And if you don't see acceleration in prices, you're going to see more shrinkage in what you're buying. Every consumer is aware that what you bought, even just a year ago, the box may be the same size, but what's in it is not. So the weights are going down. So whether you call it inflation or whatever they want to term it, it's here and it's not going away. So the biggest thing is, will the Fed continue to cut? And I think that's something you're going to have to really watch, especially with the economic numbers, because no matter what, it's going to go against their narrative. And we know that Donald Trump wants them to definitely lean towards easing, which, to be quite honest with you, it's not about just his idea. I think really what it comes down to is he wants to correct the idiocy that happened over the past 4 years when it came to financing with the Fed. I mean, we have too many short-term liabilities financed, or long-term liabilities financed with short terms. So, and we need to get that taken care of.
That would be nice. Can you hang with us? All right.
Yep.
All right, stay tuned, folks. We're coming back with Teddy. We got the S&Ps off by 2, NASDAQ off by 51. We'll talk a little bit more commodities. We'll talk some inflation. We'll be right back with Teddy. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps up by 1 right now. We're talking to our man Teddy Kegstad, and we're talking some markets. So it's interesting. You look forward ahead, Teddy, in terms of potentially inflation, food prices. I was having those conversations with my mom recently as well. We'll see where the Fed goes from there. It's interesting where they are priced right now. So would you think that we get surprises in terms of maybe some higher yields as that persists next year when that carries in? Or is that just going to see where that lies beyond the next 3 months?
It's funny you say that. Here we are on Fed Day, and look at where the Treasury bonds and the 10-year notes are as opposed to where they were when they first started cutting rates a few months ago, right? yields have not, they're actually right there. It's kind of funny. I've been talking to people who are in the real estate business too. September, they're like, oh, the Fed's cutting, people are going to be buying again and what have you.
Oof.
I'm like, I wouldn't bank on that one,
right.
and look at the spread between what's going on now with the Fed, and they're going to cut again today. And here's the other thing is now people are going to question what is the expectation of them cutting into the new year, and how much will they cut? And I'm saying, if I'm right with inflation, these numbers, if they start coming to hit over the next couple of months, you're going to see the Fed be on a pausing basis at least, and that bias is something that you got to look at the new administration. They're going to be like, come on, cut. We got to fix all this damage that's been done. We have to pay for it too. At least cut the cost of the damage, right? That's not going to happen. It's just not going to happen. And what if we have an uptick in oil? Even though they're going to turn the pumps on, okay, so oil stays stable. Let's say that does occur. We still have the things now that your transportation costs may level off, but that doesn't change the fact that the actual products now are going up. See, before we had transportation costs driving inflation, things like that, supply issues, what have you. Now it's going to be the opposite. It's going to be shortages.
Teddy, and we got to go. I say a gallon of crude is like under $3, and a 20-ounce bottle of soda is like $2.30. I can't grasp that those stay that close. So maybe we get a lift. Teddy,
Merry
thank
Christmas,
you so much, man.
We'll
Have a great Christmas, New Year's. I appreciate it as always, and we'll talk to you in 2025.
Take care.